Hi, welcome to VCC TV. Narendra Modi led BJP government came to power last year, highlighting the corruption and the mismanagement of the economy by the previous government in the last decade. The incumbent Prime Minister promised good governance and a set of reforms in order to kickstart growth in the Indian economy. While some believe that Modi government has worked towards improving the ease of doing business and setting up India as a preferred FDI destination, there are many who believe that less work has happened on the ground. With that, today we welcome Ms. Jyotinder Kaur, Principal Economist at HDFC Bank, to discuss about the performance of Modi government and the road ahead for the Indian economy. Welcome, ma'am, to the show. Starting off, how do you rate the Modi government's performance in the last month?
Well, if you sort of ask me in terms of numbers, I'd probably give them a 7. I sort of set forth with very realistic expectations, as did HDFC Bank. And given the kind of legislative and political hurdles that Mr. Modi faces, I think he's done a good job. He's strategized in pushing through steps that don't require legislative approval. He's sort of given precedence to decisions that can be made through executive order. Clearances have picked up dramatically. So he's on balance taken a pragmatic approach, and I'm somewhat satisfied.
Moving on to the second question. In your opinion, what are the fronts that the government has had positive results in till now?
Right. So as I mentioned, the strategy that the government has followed is sort of, first, instead of looking at typical big bang reforms, it's some degree of incrementalism that the government has used in. And it has sort of embraced measures that it can effect without legislative approval. In terms of approvals and clearances, those have gone up. There is a conscious effort to speed environmental clearances, for one. There is a tremendous effort in sort of securing raw material linkages. That is something that, despite the upheaval caused by the Supreme Court judgment last year, the government has sort of been quick in resolving raw material bottlenecks. It's working consciously towards raw material linkages now. So I think, in terms of the key bottlenecks that were sort of plaguing investment, the government has moved quickly, and it's done a good job in sort of doing what it can. There are other areas of concern. Of course, land acquisition remains a bottleneck, and that is something that unfortunately has to go through the legislative route. So if you sort of just make a checklist of the factors that were choking investment, environmental clearances, forest clearances, raw material shortages, raw material linkages, the mess in the power sector still remains, but at least a portion of it, that is the supply side constraints, are slowly being eased. And land remains, as I said, in terms of the checklist, the piece on land remains an issue. And financial access is something that the government has been sort of making initiatives to kind of ease constraints, but certainly a lot more needs to be done. So, I think if you've got 4 major hurdles, you've got about 2 sorted, and 2 still remain to be addressed.
There are 2 views regarding Modi government. One has been that of optimism. The second one is rather that Modi is all talk and less work has come on the ground. What would be your take on that?
So I think the optimism was somewhat misplaced. I think the optimism was irrational, and to sort of blame it on Mr. Modi entirely is incorrect. I think the optimism was predicated on a perfect scenario, a perfect political configuration, and perfect areas of doing business. That is not a reality. And so on balance, I'd sort of think that Mr. Modi is not all about talk. Although I admit that the government is very good at making slogans, he is, busy at work, and you are seeing some signs of that sort of filter through. You definitely have a bureaucracy that is more engaged, certainly more active. Yes, a lot more needs to be done, but a lot is being done as well, to be fair to the government and Mr. Modi.
Can I have your views about the dichotomy between the GDP and the high frequency data? The industrial production is still sluggish and the banking sector is yet to see recovery. Can we rely on GDP figures alone?
Well, we really don't have a choice. We have to go with what we get. I think it's just a form of kind of reorienting what we think, the 7% or 7.5% odd number that the CSO is putting forth is really all about. We need to sort of now look at 7.5 as a number that is below potential, rather than a number that is close to potential. So we just need to sort of forget, in a way, what GDP growth used to be like based on the old series, and look at the fact that even at 7.5% or 7%, growth is below potential. Having said that, it has certainly made the job much more difficult for people like me and the market. And on balance, if you sort of tie in the high frequency data with the GDP numbers, there is a very clear disconnect. But as I said, it's just all about reorienting yourself. The fact that there is a disconnect between high frequency data and the GDP growth numbers indicates the fact that indeed 7.5 is not as good as what it used to be. 7.5 is the new okay or bad. With regards to the banking sector, we need to sort of realize and understand that the banking sector is a lagging indicator of growth rather than a leading indicator of growth. So when economic activity picks up substantially, you will then see an impact on the banking sector. And don't forget, the banking sector is sort of entering this upturn or upcycle with huge legacy costs. There is an enormous dent on asset quality. We need to sort of put things in perspective before we look at or try and map the recovery with the health of the banking sector.
And do you foresee a pickup in industrial production environment?
Given the current run rate, we're still looking at a somewhat subdued growth rate. We're actually looking at data is out today for the month of March. We're looking at a number of 4.4%. Now, although that seems fairly high, it is coming on the back of a very favorable base from last year. And as last year's base unwinds, favorable base unwinds, we are likely to see industrial growth as measured by the IIP falling back in the 2 to 3% range in the first quarter of this financial year. But having said that, there is some traction building up in areas such as roads. There is a lot of effort in railways in terms of securing funding. There is certainly a lot of effort in being put in the Make in India campaign, and that has implications for defense. There is also some signs of revival in the auto sector, the auto component sector. So we should be looking at a pickup in the second half of this year.
We have seen farmer protests erupt all over the country. Has the government accentuated the agrarian crisis by reducing the quantum of subsidies and not increasing the MSP?
Well, it is certainly not the best time to be a farmer today, and the government is doing what it's doing as a result of past mismanagement. So let's sort of take a step back and see that are we sort of okay with having MSP price increases, aggressive MSP price increases, and then again falling back in the loop of CPI inflation coming in at 10%, no growth whatsoever. So there is a rebalancing taking place. The terms of trade have shifted away from the rural economy, and what you're seeing is some signs of that distress. There are more effective ways of dealing with that distress, and one is, of course, to kind of look for better targeted compensation. The farmer unrest has come because growth impact of the unseasonal rains that we've seen has been far more acute than the impact on prices. And there need to be targeted programs to kind of offset the pressure on farmer incomes. Now, the problem is that that is not happening. There is a misdirection in the sense that the compensation is paid on the basis of land ownership, and a large share of farmers are actually tenant farmers, so they don't end up receiving the government's compensation. So is the government doing enough on that front? I think perhaps the compensation channel needs to be better targeted, and so there is a separate element to the distress that we're seeing amongst farmers. Some of it is unfortunately a necessary rebalancing that the economy needs to go through. What the government can do to make the rebalancing less painful is look for better targeted compensation.
Since coming to power, Modi government has been talking about deepening of financial markets. Is the government on track in deepening of the capital markets and ensuring that banks are adequately capitalized?
Right. So I think, as I had sort of mentioned earlier on, that the 4 hurdles that are faced, that are constraining investment, financial access remains a problem, and unfortunately the government has not moved fast enough on this front, and not enough attention is being paid to financial access as a major hurdle to investment recovery. So far there's been a lot of emphasis on typical impediments, policy hurdles, policy paralysis, but not enough attention is being paid to the sort of constraints that present themselves when financial access is limited. And so this is certainly an area that we believe needs more attention. There is certainly a need for recapitalization of public sector banks. There's certainly a need to deepen capital markets, particularly the corporate bond market. And not enough is being done on this.
Moving on to the question of stock markets. We saw euphoria in the market with the coming of Modi government, and this year only the markets crossed the 30,000 mark. Now, going forward, what trends do you see in the stock market given that there is a correction? Do you actually see that a correction, or is the investor interest actually waning off from Indian markets?
So we would certainly look at it as a correction and a reality check, as I had sort of mentioned earlier on, is that the realism or the constraint and the optimism around Mr. Modi and his government is finally sort of stepping in. However, I wouldn't sort of entirely, and I do look at it as a correction, which means that eventually you should see equity markets move higher and foreign investor appetite return. This is unlikely to happen at least over the next 3 to 4 months. The problem is that the reassessment on the Indian economy has come at a time when other emerging markets are looking more attractive, particularly China. And of course there is a great deal of financial market volatility that has come on the back of the prospect of that could come on the back of the Federal Reserve finally embarking on monetary tightening. It's going to be a turbulent couple of months for Indian assets, not just equity market but also fixed income market, as well as the exchange rate. But once that that period of turbulence subsides, and we're hoping that that'll pan out by December or maybe even October, November, we could again sort of be looking at another up move or uptrend, which we're hoping will sort of map in with the Fed having already hiked in September, some degree of pickup in growth beginning to show up, and concerns on competing emerging markets resurfacing, particularly in China.
Coming to the last question, how can the government improve the prospects of growth in the Indian economy?
Right, so then clearly, firstly, the two bottlenecks that are still remaining need to be addressed fairly quickly. Land acquisition remains a problem, and the sooner we get on with the business of clearing the uncertainty around it, the better. Clearly, banks need to be made healthier and able to sort of look at or be able to finance the growth that the government is working or projecting. And besides that, there needs to be certainly more effort on execution, looking at faster project execution, engaging with the private sector much more will certainly help.
Thanks a lot for your time.